Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, July 28th. Wow, we're getting to the end of the month and approaching towards the end of the summer here. Everything's going by so fast here. We just got one economic news release scheduled for today, and that is the weekly jobless claims we get every Thursday here. So last week we had 252,000 people apply for unemployment, which is a good number. We've been kind of getting in that low in the 250 range, but the forecast for this week was at 260,000 people. And it came in at 266,000, so obviously not too good, seeing it jump up 14,000 from one week to the other. So something to keep an eye on if this is going to be, again, something that could continue, especially this week. Tomorrow we'll have the probably the big number this week. We'll have the GDP coming in for second quarter, so that'll be our first peak of the GDP for second quarter. It'll be kind of interesting to see what the initial comes in at. Now that could really kind of set the tone for next week, primarily because we had a pretty abysmal first quarter, and they're kind of thinking that the second quarter they're expecting to be a lot higher, like in the little over 2% range. So it'll be interesting to see if we can get in that 2% range, or if it'll still be pretty small like the first quarter. Let's go ahead and take a look here. The stock market's a little mixed so far this morning. They're still kind of digesting some of the data that came out from the FOMC announcement yesterday. One of the things is that basically, obviously, they shelved the interest rate, which nobody expected them to raise interest rates yesterday, but they did make a comment saying that the short-term concerns that are basically have diminished. Basically, they don't really have as much concern on the global level or some of the domestic level that basically leads or paves the way that they could have a potentially a rate hike this year, maybe even as soon as September. So they're still kind of digesting this a little bit here, and so be very cautious if you're playing the markets at all, because these can quickly change around. Here's the bond market. We had a nice rally yesterday. We jumped all the way up 34 basis points. It helped push us above the 10-day moving average and this 25-day moving average. Today we started at about the 25-day moving average, even dipped slightly below, but we're up again further. We're up about 3 basis points from where we left off yesterday. So if we can keep this up, we can maybe have another day, especially if we can get another day and higher here, we could see another nice trend reversal here and get our way up to better rates again, maybe even back to these rates earlier in the month. All right, folks. So good news. We had good news yesterday, as well as it's kind of pouring over into today for interest rates. So rates are about the same as where we left off. If they did improve rates yesterday, they're going to put it into today's pricing. But for the most part, rates are about the same as what we left off yesterday by these charts here. All right, have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.